So if you are a yoga teacher or a fitness instructor and you do business, you've likely had the question, should I have an LLC? You hear people all the time talk about LLCs and do I need one? What are the reasons why maybe I should set one up? And how do you go about that? If you've had any of these questions, this episode is for you. So I know the topic of business and legal entities and taxes is not real fun and sexy, but it is really important because it can make or break your business. So in this episode, I want to discuss some of the differences between these different entities. And I am not a lawyer. I am not a tax professional, although I do know a lot about taxes. So none of this is legal advice or tax advice. Please seek professional advice for your specific situation because it is different. A lot of answers to your questions is going to be, it depends. But I do want to give some general advice and recommendations, at least so that you can go to your tax professional and ask some questions and help guide the conversation. Well, welcome back to the Jesus Coffee Yoga podcast, where we talk about Jesus, coffee, and yoga. And really what we try to do is help you design the life and the business of your dreams, a business that supports your life and not dominates your life. If you like this, if you find this helpful, make sure you subscribe and don't miss our future episodes and check out some of our previous ones. All right, Kristen, we got to talk about what's in our cups today.
Let me tell you what's in my cup. Nothing is in my cup because it took us so long to set up to record the podcast that I actually drank all of it. But I was drinking, I have my water, my trusty dusty water. But I was drinking some electrolytes and energy, some little energy fizz that I have because I was feeling kind of low. And so I just needed something to brighten me up. But it's empty now because we are here and we finally got everything going. So yeah, that's what's in my cup. What's in your cup?
I've got coffee from Costa Rica. I mean, the beans were grown in Costa Rica. I didn't get the actual liquid coffee from Costa Rica.
Well, I'm going to Costa Rica in a few months, so I can bring back some coffee. I'll go to the side of the mountain, pick the coffee beans myself.
Nice. And speaking of, do you guys, is there still space available?
I haven't talked to Sarah in a minute, but last I heard we had 2 or 3 spaces available. So
okay, so if you're hearing this as it comes out, we'll include a link in it's not related to this episode at all, but since you brought it up, we'll include a link to that. And if it's already sold out or if it's come and gone, if you're listening to this later, then keep an eye out for future retreats.
Yeah, come with us to Costa Rica to pick coffee beans for Nick.
Yes, that would be amazing.
That's it. That's where we're going.
You'd have to grow it and dry it and process it, and that might take
it would. Long. Yeah, we probably wouldn't do it justice. We are going to Panama. I don't know if they have coffee there, but we're going to Panama in February, so maybe we can find some coffee. Okay.
She laughs because every time I do that, look, it's just a classic song, and every time you say it, even if I don't say it, that song instantly starts playing in my head.
Well, and what's funny is we were in another conversation with somebody else. Oh, when we were recording on a retreat, I said something about Panama and the person that was with you started singing it too. And I'm like, okay, that's what it is. Look, if we're going to talk about boring things, we might as well make it fun, right?
Yes.
This episode is so your lane that I'm so glad you're here to talk to you because people will ask me about it. And to be honest, even as a hairdresser, I remember, I think I told you this, that I was all of fresh, 21 years old, starting my own business with zero experience in how, because I was developed and trained in a commission-based space, which means they trained me, they paid me, and I just made a commission of what I brought into the salon. And then when I went out on my own, I was like, hello world, had zero idea what I was doing. Just knew that I didn't want to work for somebody else for 40 hours for what I could do in 25 hours. And my clients would get to pay a little bit less because it's different. So I remember someone saying, you need to go, I think she said go get incorporated. And I'm like, great, what's that? And who do I ask? I had never done my own taxes. I'd only been married 1 year at that point. Didn't know what we were doing, had zero idea what I was doing. And so many people probably even not 21 years old, they're still kind of okay, I want to kind of make my own business and make my own money, make my own schedule. Even if it's not a lot, even if it's just a couple $100 to a couple $1,000 a month, you're not trying to 6 figure. It's there are still procedures and processes that we need to put in place to protect us, to and we're going to talk a little bit about what does and doesn't help us with taxes and things like that. So yes, this is one of those things that you might be tempted to skip because it's so brainy in a way, and it's like the things that people don't want to do, talk about, or process as they're really excited about this new yoga adventure, or making money in a different way than just checking in and checking out of an office. So it's kind of one of those things you just got to get. We'll try to make it as entertaining as possible, but at the same time, like, put us on two speed and learn what you can, take notes, and avoid some of the mistakes that we've made along the way.
Two speed, pause it, go back if you need to, slow it down on the parts that stick out to you. And even if you already do have an entity set up, maybe you already do have an LLC, I still want you to listen through this because I might give some tips that can help you make it more robust, maybe help you save on taxes. And again, we're not going super deep on taxes today, but I will mention a few things that you want to consider.
I was going to ask you, like, how do I know what to even ask for?
Yeah, that's a really great question. So what I want to do first is just cover some of the different entity types and just a real high level of like what they are and why you might want it. And most of them are not for you. Again, it depends. Maybe it is. I'll throw out one reason why you might do one of those over the other. So just starting out, you definitely don't want to do business just under your name. It muddies the water for taxes. It's confusing to the public. Like, you want to have, like, even if it's just Kristen Campbell Yoga is better than just Kristen Campbell. What we want to do is just establish something that's separate from you, mainly so that we can keep financial transactions separate. Because if you blend them, it makes tax time a nightmare. And it also opens up a major audit risk. And no one wants to be audited. And even if you are audited, you want to be able to survive the audit because you've put a couple of these things in place just to keep things separate. So to do that, what you'd want to do is file what's called a DBA. Some states call it a trade name, and there might be some other ones. But in Oklahoma, they call it, I think they call it a trade name, but a DBA, or a doing business as. And essentially, you're just saying, I am setting up a business name that I want to operate under. It's not a corporation. It's just a name, and that's the cheapest and the fastest way to get started. So at minimum, everybody should do this step. And most of the time you can do this. I don't know all the states, but most of the states have a Secretary of State website. You go like Secretary of State for your state. And from there should be a spot for like business services or something where you can click and do like a search to make sure the name's not taken. That's an important thing. You can't just operate under a name and not file it because you might be using a name that already exists. So do a quick name search. It'll tell you like, here's all the names that are kind of close, and just make sure there's not already a name like that. If it's your name, like Kristen Campbell Yoga, there's probably not going to be another one. But if it's something like Upper Room Yoga, like someone may have thought about that already. So you might just want to check and make sure the name you want to use is available. I would also, even if you're not ready, just pro tip, even if you're not ready for websites and like building this thing out, because like you don't want to overcomplicate it. I'd like to, when I'm naming something, I like to see if the domain is available for .com. Sometimes that influences like the name I'm going to pick. So I'll brainstorm names, and then I'll go and do a search somewhere like namecheap.com, or just one of the places where you can register a domain and just see if it's available. And sometimes that might tweak. Oh, I'm going to pick this other name because it is available. Even if I don't want the website, I'm going to get it now so that down the road, someone else doesn't take it. And then I can't do a website with my business name.
Fun fact, really quick, the Jesus Coffee Yoga. Remember, we bought this domain like 5 or 6 years, like a long time ago, because we had a shirt that said Jesus Coffee Yoga. And you're like, that sounds really cool for a website. So we just bought it, and we've had it for a couple of years now. And now we're actually using it for this podcast. So like, that was just a little side note. I know it has nothing to do with it, but like it really does pay sometimes to do that.
So make sure you file that, get this DBA or trade name or whatever. Step number 1. Step number 2 is set up a bank account with that trade name. And if you go to a bank and say, "Hey, I teach yoga. I want to set up a bank account." If you don't have that paperwork that shows that you filed a DBA or a trade name or whatever with the state, they will not let you create a bank account. I mean, they will under your name, but it would just be Kristen Campbell then. It wouldn't be Kristen Campbell Yoga or whatever you wanted to call it. So like you really need that piece. There's another piece called an EIN, employer identification number, I think is what that stands for. Everyone just calls it EIN. It's basically a social security number for a business. when you file your taxes with the IRS. You don't need that. So don't really worry about that right now. You can set that up at any time. You can change, over any time, but you don't really need that right now. One thing to note here, this is a side note from 2024 and beyond. There's a new thing called the beneficiary ownership information, BOI, something like that. There's a new filing process in place for all businesses, and it might also relate to DBAs and trade names. Like, I'm still unsure about that, and I'm talking to my legal counsel about that. But this is a new thing through FinCEN, Financial Crimes Enforcement, or something like that. They're trying to crack down on money laundering and like drug dealers and stuff like that. And every business that's incorporated has to file this. And it basically says, here are the people that own more than like 20% in this business. And if the business already existed, you have to the end of the year to do this filing. And if you don't do this, it's a big deal. This isn't like, oh, slap you on the wrist, pay a fine. It's like $500 a day and jail time. So like, don't put this off. Like, you need to talk to somebody if you're not sure what to do. There's a website, and I'll link it in the show notes, but talk to somebody who knows something about this, a tax person or a lawyer. You need to get this filed, and you can pay someone to file it for you. So I've done that, but you can do it yourself too. But like, don't sleep on this. This needs to be done. If you create a new entity in 2024, you have like 90 days, I think, to do this filing. So definitely don't sleep on that. And no one really knows what'll really happen, but they're saying like you could face jail time by not doing this. Okay, so we want to have a separate bank account. And again, even if it's just a DBA, there's no corporation, whatever, you need a separate bank account. So when people pay you, the money will go in this account. And then when you pay for things like expenses to run your studio, I say studio in air quotes, like even if you don't have a studio, even if you just rent space, even if you just get free space from your church, you're going to have some expenses. You'll probably do essential oils at some point. Maybe you might buy a speaker and a microphone so people can hear you. You might buy some yoga mats to have in class so that when people come and don't have one, they can use one of yours, and yoga blocks and straps. And, like, there's going to be things that you're going to need to spend money on to teach. And you want all of that to come out of this account, not any of your personal accounts. This is a huge, huge problem, and a big reason for audits and like problems if you get audited is commingling funds, they call it, between your business and your personal stuff. And now, if you accidentally paid for something with personal funds, or to get started, if you use personal funds to like fund things like that, that's okay. And the business you can reimburse yourself to fix that. So don't worry if that happens. But just on a regular basis, don't use personal funds to buy something for the business, and don't use business money to pay for something not related to the business. So that's step number one. Or that's step number two. Get that bank account. Next, we have a few different entity types that I want to discuss, and two that aren't really, it's probably not going to be for you. C Corp, definitely don't look at that. There might be a few instances, and if you're already, like, if you have funding and you're going to like build a studio, like, you might need to look into a C Corp, but that's probably not the majority of you. And so you need to talk to a tax person, a legal, someone, talk to an expert who can help you make that decision. Another type of corporation is called an S Corp. And this could be for you if you're already operating. Let's say you've been teaching, but it's under your name and you don't have an entity yet. If you're netting, so after all your money comes in and your expenses, that net difference and before your taxes, if that net difference is about $50,000, you might want to look at setting up an S Corp. With a caveat here, you don't have to, because you can create an LLC, which I'm about to talk about. And when you hit that threshold, then you can file to be taxed as an S Corp. You don't have to change it, but from the IRS point of view, they will tax you as an S Corp. So you get like the best of both worlds. So I recommend most people, and even if you're just starting out, I recommend creating an LLC. And the main reason, it's not necessarily a tax thing, really, whether you're a sole proprietor, so you just did the DBA or trade name, or you're an LLC, there is no tax difference. The IRS ignores LLCs. I mean, you have to pay taxes, but it's no different. They call it a pass-through entity. So the benefit is not from a tax point of view. That comes from just having the separate business. The tax benefits come from that. The real benefit of an LLC is legal protection, liability protection. So keeping your personal assets and personal things separate from your business activities and giving you a layer of legal protection from both sides. So this could be something happens in your studio and you get sued, which I know every person I mention this to, they're like, "Oh, I know my people. They love me. They would never do that." You don't know that. And you could have people come in who you don't know, but do you really want to risk it? People can sue you for any reason. Even if you did nothing wrong, I could just sue you I could just make it up, take you to court. It's going to be really expensive. I might not win, but like still, I could win something. And then if you don't have this in place, they can go after your personal assets to satisfy the judgment. And not only that, let's say your husband has a business or something, or you have rental properties or just any other assets. If you don't have this in place, they can go after those things to satisfy the judgment. You don't want that. Or conversely, let's say your husband does have a business and or wife. I shouldn't assume every person listening is a female. Let's say your spouse has a business and something happens in that business. If there aren't certain things in place, they could come after your yoga business. Or at home, let's say someone slips and falls outside your house and sues you and wins, which could happen. They could come after your yoga assets. Like, you really want to have this legal protection in place. When it comes to establishing an LLC, you can do it yourself. And you can even go to some like cheap websites that do a lot of it kind of automatically and cheaply. And I'm a big DIYer. I know a lot about this stuff and I can do it. And in the past, I would do this myself. I have flip flopped on that. And I now think you should pay a lawyer to set this up the right way the first time, because there will come a point where you're going to hire a lawyer to clean up some of the stuff you didn't do right, or you're going to have an audit or a lawsuit that's going to blow up and realize I have an LLC and it didn't protect me because I didn't do it right. So hire a lawyer. There's some things you need to put in place. You need an operating agreement. You need a corporate book. There are meetings that you need to take minutes for. Like, there are things you need to do to really keep that, they call it corporate veil, in place that'll protect your assets. So you want to make sure you have that set up from the beginning and that you do it in the right way. And if you hire a lawyer, they likely can file that BOI thing that I mentioned earlier. Totally worth it. I highly recommend getting this set up from the beginning and doing it right, doing it with a lawyer. It's an investment. You might pay $600, $800, $1,200, just depending on who you go with. And I have someone to recommend if you're looking for someone. Just used them and it was an amazing experience. They do high quality work, but get somebody, invest in that, because it'll pay dividends in the future.
When someone's looking at like, okay, I want to get this, protective veil, corporate veil to protect me, how do I know what to put it under? Like, so for me, where I'm at specifically right now, so I do have Kristen Campbell Yoga LLC, and then I do business as Inside Out Wellness, or I've done before I was just Cushing Yoga, but now I'm not just yoga, so we changed it. But anyway, so like, how do I know when it's time to, or like, so for where I'm at right now, like I have my yoga that I teach. And then I have my studio where I contract other teachers to teach for my studio for me. And then I'm doing retreats. It's all kind of like, is there a world where it makes sense just to be like Casey Fitness or Casey Wellness or something like that, to where I can put multiple? Or do we always, I feel like you're much more detailed in this way than I am. And like, is there a world where it's okay just to put everything under kind of everything you do, if it's kind of in the same vicinity? Like, it's not my hair and my yoga, but like retreats are wellness and the studio is wellness. Does that make sense? So like, how do
Yeah.
I know what to do there?
Yeah, good question. So again, I'm not a lawyer, and someone who, like, you need to speak with someone who is qualified
Yes.
and they can really hash this out, because it really does depend on a lot of factors. But generally speaking, when what you're doing is related, I would just keep it under the same thing. So, and if it's a naming thing, so the issue, I think the questions you need to ask are, is it confusing to my audience because my name is something yoga and now I'm offering more than yoga? And if that's the case, you can just file a new DBA just to change your name, and the LLC, like under the LLC. So like Kristen Campbell Yoga, you can file a new DBA like you did for your Inside Out Wellness. And so it's not a different business. It's just another name. Now you can promote yourself. You can get a bank account, which you don't have to. You can keep your bank account the same. But if you wanted it all to match, but that way you can advertise and market yourself as Inside Out Wellness without having to make a different entity. Because one thing to keep in mind is every different entity you set up has to do its own tax return. And even if it's not a tax return, it kind of depends, like if there's partners or not. If there's no partner, if it's just you. Real quick tip too, a lot of people think they have to add their spouse as a partner in the LLC. You don't. An LLC is ignored for tax purposes. It just passes through to your regular tax return. And so if you're married filing jointly, it doesn't really matter anyways. Like it doesn't matter. And from a legal point of view, like you guys are like you're 50-50 anyways. So sometimes it can muddy the water adding a spouse, and sometimes it can screw up some creative tax strategies if it's done in a certain way. So again, that's why I like to talk to a professional who, for your instance, can say, hey, do it this way so that we don't screw up this other thing you might want to do down the road. So all that to say, if it's related or if it's just because the name is confusing to your audience, just do a DBA. If it's like all encompassing, now I offer fitness and yoga and strength training, so I change my name. If it's I want to offer a different service and there's really two different audiences, that might make sense to be a different entity. Well, like your hair, like I do yoga and I cut people's hair. That should not be under the same entity. So in that case, you would want a separate entity for the hair business. And I would say even if you only have a few clients, even if you only have one client, you at least want something separate. You want a separate bank account and separate, like you always want something separate, even if it's just a DBA, so that you segregate your money. There's not the commingling of funds, and it makes tax time so much easier. Like if nothing else, audits aside, if it's all in your personal funds, your personal checking account, you will have to go through and identify each and every transaction because it's all mixed with your personal stuff. So you got to go through and pick, what is that from? I don't even know this money coming in. So it's just really confusing. So by having it separate, it just really speeds up tax time. So you definitely want to have separate entities if it's a separate thing. I would say in general, especially when you're just starting out and maybe you don't have other businesses. If you have other businesses already, if you have a trust, this answer is probably going to change a little bit. But it doesn't really matter if it's just another LLC under your name, or if you have what you could call a subsidiary, like an LLC that your LLC owns. Again, talk to a tax pro because it might make some stuff easier, and it might not. Like you might end up having to do 2 separate tax returns for each one, and like it doesn't matter which one, who owns what, like you'll still have to do it. There are instances where it makes sense to not be nested under the other, and there are some more advanced tax strategies which we'll discuss in the future episode with my tax advisor. So I'm bringing on my tax advisor soon, and we're gonna go a little bit deeper on taxes and share a story of how, had I talked to my tax pro before I made a certain choice, that I would have paid $10,000 less in taxes last year. And it just pains me to say that. There are some advanced tax strategies where having another entity, and it can just be a sole proprietorship, doesn't even have to be an LLC, where that entity can provide services to your other business, and things that maybe before wouldn't be taxable or wouldn't be a tax write-off now can be. I think my answer is always going to be like, talk to an advisor or a lawyer who knows this stuff. Don't talk to a divorce lawyer. Talk to someone who specializes in business and tax, especially small business. And just make sure you do it right, and make sure you think through, this is where I am today. This is where I want to go. And they will help you craft exactly what you need in order to make that happen and to allow for future growth. Because there are definitely things you could do wrong today that will screw that up. Some things are fixable. Some things you might have to like make a new entity because you hosed it so much.
Yeah. And I think too, like all of the sounds, especially if you haven't really been in it, like I've done it. And if I'd heard all of this when I first started doing business, it sounds like a lot, but it's really not. Like it's really like, just go through the steps and go through the processes. So you're not 10 years into your business going, man, I wish I'd set up this LLC because of X, Y, and Z, whatever, or $10,000 mistakes or whatever, because it's like it sounds overwhelming, and it can be, but at the same time, like, just do it and have it done. And that way it's not like hanging over your head. Cause now that you know the information, whether you don't do it, whether you do it or not, like you're going to know the information and be like, I should have done that. So like, don't allow the idea of it being overwhelming, because that's what those people do. Like people who are in the tax industry, or like we did speak to an attorney about our, LLCs and how to arrange those, and we even had to have some conversations about that. So like, it can feel overwhelming, but that's what they do. Like it's their job to help you, and of course, we'll resource you with some of the people that we know and trust and things like that. But you have to also remember, like state to state, and even for some of you guys, country to country, it's going to be different. But somebody knows somebody that you need to know to help you.
And so I'll for sure share some resources. One, I will connect you with my tax advisor, and she can do a really quick, like free consultation just to see, do you want to book a paid consultation? And so she can do a paid consultation where she really digs into your situation, and she helps craft what we call a trifecta in the world that I've landed in on business taxes and legal stuff, where they help craft the perfect estate plan and like how to set all this stuff up. And so I highly recommend that. And there's also a network that I can put you in touch with, where you can find people in your state if you want someone who is in your state, which they don't have to be in your state, but it's the network that I highly trust and recommend. So I'll link to that in the show notes. So before we move on, I do want to discuss just some general like operations, like procedures of cash flow, and like how do you pay yourself and all that. I want to talk about that in a minute. But first, I just want to give a few tips. If you're going to talk to an attorney or a tax pro, there are things that you want to put in place. One is you can get a accountability plan. So that's something you can set up that spells out how you can really justify your home office deduction. So even if you have a part-time business, there's a piece of your home that you can write off based on like the square footage and like your utilities and stuff like that. I think up to a certain amount, 100, it's up to a certain amount. Your tax person will know that, but having that in place can make sure that that's bulletproof. And it's like a lot of these things, some tax professionals will say, like that's too edgy, or it's pushing it too much. It's too aggressive. And a lot of this stuff it's not at all. If they're saying that, get another tax person. And there's a major difference between a tax preparer and a tax advisor. A preparer, just like you give them your stuff and they file your taxes. An advisor will say, hey, here are some things we can do to pay less in taxes this next year. You want an advisor. You want someone that can help lower your tax bill. And like there are legal ways, you can call them loopholes, but like they're there for a reason. And it's not illegal. As long as it's not illegal, you're following the rules. It's totally legit to use these things that are put in place to help reduce your taxable income. You will want an operating agreement. Even if it's just you still want an operating agreement that spells out like this is the purpose of the business, and this is how we operate, and this is who the members are or managers or whatever they recommend for your setup. And this is, it just spells out some things that every LLC should have, even if it's just you. And then ask to put a board of advisors in place. Now, this is something pretty new to me that I've learned recently. And what you can do, and it's not, I don't think you have to file it or anything. You just need like the paperwork in case you get audited or something. But you essentially create a board of people who you can discuss your business with and just get advice. And not only that, you can sometimes be strategic with who's on that board and write off some travel and some things that maybe otherwise would be a personal expense. So just an example, I live in Oklahoma, but I have family in Wisconsin. That's where I'm from, is Wisconsin. And we make several trips back and forth to go visit family. And I have put my brothers on the board, and they live in there, and my parents. And any trip that I make, I can call that a business trip. So the travel to get there is a tax deduction, the mileage, or if I fly, the flight, meals while I'm traveling. And then you could even do vacations, and not the whole vacation. You can't go to Costa Rica for 7 days on a family vacation and write off the whole thing, but you can write off the travel and at least 1 day of like hotel, So what you can do is have a board meeting, and that board meeting and you want to discuss business. Like don't do this and not do it just to get the deduction. Like that's shady. Don't be shady. But you can legit have a board meeting, bring your family together and just talk like, hey, here's how the business is going. Here's kind of where I'm at. Maybe it's stuff you're stuck with, and just get some advice. Like I bet there are people in your life who are smart people and maybe could just give a little perspective and give you a little bit of coaching or some thoughts. That's a great way to write off something you're already doing anyway. So having that board of advisors is a big one to do.
And how do you go about setting up a board of advisors? Is that something, I mean, like I know like to get an LLC or whatever, you go to the specific website. Like, how do I do that?
Again, it doesn't have to be filed with the state. This isn't like a state requirement or anything like that. You just want to have a document somewhere that lists like who they are, and then just kind of just have that handy, save it with like your paperwork. And it's really just in case of an audit that you can justify, hey, like there was this expense. These were the people there. So like when you do these things, make sure you keep your receipts, write on it like who was present, and then especially at board meeting, you're gonna want to hold some minutes. Minutes is just like a summary of the call, and even if it's a Zoom call, or some people are in attendance on Zoom call, like you could use AI to do like an auto summary of the meeting minutes. But working with a lawyer, they should understand what this is, and if they don't, you need to find someone else who does. Again, use the network that I'll recommend, and the law firm specifically that I recommend. This is their language. They do this day in and day out. And it can change. You might decide, hey, there's like, I have a brother who lives in this other place. I want to add him to the board. And now I can travel to see him and write that off. So you can update it at any time. So next, I just want to cover some basic guidelines for operations. Like, how do you actually operate? And this is whether you're a DBA, trade name, trademark is something else, trade name, DBA, sole proprietorship, or an LLC, or just whatever entity that you went with. You want to make sure you have your own bank account, like I mentioned, and any money coming in goes into that bank account. And there are different ways to collect money. So that was the first point I wanted to discuss. So when you're first starting out, just do whatever's easiest. Like if you have a Venmo, just use that. But my word of caution is you can't use something that's linked to a personal account. Or if it is, you need to like unlink it and only use that for your business. You want the money from it to go direct to the business bank account, not to your personal account. So if you already use Venmo and you heavily use it for personal stuff, or the Cash App, or whatever, find something else. There are a bunch of different options. There's Square, there's PayPal, there's a bunch of them out there. There's different ways that you can collect payment. One thing I want to suggest here though is to use something where you can specify, you can like make an item, or you can make something in a catalog, or some way that when someone pays for something, they are not entering the amount and they are not entering the description of what it's for. Because what's going to happen is, like, let's say you're using the Cash App, they send you $25. Oh, Susie just paid me $25. What is that for? She didn't put a description, or maybe she did, but like, I don't know what it means. And if you've got drop-in classes and you're selling shirts and oils and you just started running a series and you've got whatever, you're going to have all these transactions that you're trying to figure out, what is this for? Did Susie even pay for the class she just showed up for? I don't know, because I don't have that information. So as soon as possible, you want to switch to some kind of system where you have a little bit more control. So if you want to go super cheap, as in free, PayPal has a way to create what's called a button. And then in that button, you can like name it, you can set the price, you can even set a quantity. So if you have like, hey, there's only 12 spots for this class, you can set the limit to 12. Like, it's pretty cool. And I can show you how to use that. Actually, I think I have a document somewhere. So if you're wanting that, message us on some platform or something, and I can shoot that over to you. So that's one way. And then at the end, it gives you a link, and you can just share that link. So you can like post on social media or send an email or text people, and it has that link. They click it, they pay, and they are not entering the amount, and they are not telling you what it's for. So when you have all these transactions, you know exactly what it is. Oh, this was a drop-in. Oh, this was for a shirt, or whatever. Kristen, what are some alternatives or some options, or like what's your recommendation for collecting payment?
My recommendation is, I've said this in other episodes, is to get it in one spot as quickly as possible. So get the system, pay for the $30 to $50 or $100 system that's going to help you collect it. And that way you can just see the data. And Venmo and PayPal, like yes, like get away from those as quickly as you can. I do have mine set up as a business. It's just my Campbell products. Like that's all it says. It's not even like Kristen Campbell Yoga, but it does go to that account. So I personally, if, like you were saying, like even if it's just a free alternative, Square is really, really, really good with kind of helping you itemize things. It's free. It does integrate into a lot of websites, all of those. But my main advice is to find one and stick with it as soon as possible. Like start that way so that you're not trying to sweep up the mess. I've done it. Like I've done at the end of the year or like when we're pulling up tax stuff where it's just like, I don't even remember what this $150 was for. Like I know it's one of my students, but was she paying me for yoga? Was she paying me for like, we don't do t-shirts, but like something oils? Was she buying oil? I don't even know what she's paying. So that would be my advice is like, get it as itemized as possible. And then I don't know about Square and Venmo just because Venmo and PayPal and Cash App because I use Square outside of Acuity, which is what I use, which is also powered by Square. It'll allow you to make not an invoice, but like make a pay link for them and you can put on there what it's for. So that's still better than nothing. And even with Square, you can make a payment or like just a button for them to click. Like Nick was saying with PayPal, it's kind of the same. You can just write it out that at least at the end of the year, you know what it was for. But my suggestion is always going to be find a system and stick to it and don't budge. because I still to this day have people come to my class and they'll Venmo my personal account $18 for a drop-in. I'm like, how did you even get my personal account? Like I looked at my personal account the other day and I had like $200 just sitting in there and I'm looking and I'm like, it's people's drop-ins that I had no idea because I don't even use that very often anymore. So I was just like, this is so random. So yes, get it, communicate it effectively and often. This is how you sign up. This is how you pay. Don't budge. Like that is my advice. And those are the systems. I really like Square a lot in this season. That's working really well for me outside of Acuity, and they do really well together.
Yeah. And even on top of that, you could add in a point of sale system, and a lot of those will have a reader that you can plug into a phone. So you don't even need like a cash register and whatever. You can just get their card reader, plug it into your phone, and people can swipe credit cards or debit cards right there in person.
They tap pay now. So I have a
Oh,
client that pays, she does 6 months of yoga at a time. And she always just, it's funny. I live in a small town. So like everybody knows where everybody lives. So she'll just like, and she lives in my neighborhood. She'll just like come to my house. She's like, hi, I'm here to pay for my yoga for the next half of the year. It's her and her husband. And we don't even have to type anything in. I just hold it up to my phone and it tap pays now. I'm like, that's really cool. So yeah, there's so many other alternatives, but one system, go to one system.
one word of advice too. A lot of people, especially when you're first starting out, are gun shy with using anything that has a fee involved because it does feel like that's money now I'm not getting. But one, you can just increase your rates a little bit to cover it. And two, it's just a cost of doing business these days. And it's so much, it saves so much hassle of like having to get cash or a check and then go deposit it when it's just it's the click, they do it. Like it's hands off. It's easy for both sides. So as much as possible. And I know we have a coaching client who has some older clientele who are really resistant to technology. And even with them, I think with some coaching and like, let me do it for you, or I will help you do it. Like you can get some of them on.
You can come to my house and I'll swipe it for you. It's perfect. Like,
Yeah. Or
yeah,
get like a recurring thing set up or whatever. Like there are ways to handle it. And you might still have the few who are like, I ain't doing it. Like, okay. So I'll make exceptions, but I wouldn't publicize the exceptions.
and I do have those people that are like, they literally only do cash and check. And it's like,
Mhm.
we make those exceptions, but I don't lead with those exceptions for sure.
Yeah.
Yeah, no, it is. Well, and you're talking about the fees. Like, so that is when the first time I upped my rates as a yoga teacher, was when those fees came in. So like, I thought, it's going to now cost me about $30 a month to run this system so they can book on their own. And it kind of has like a website situation. And then I'm now paying a fee to collect the money. But to me, like I would pay $2 to have someone go make that deposit for me to give me my time back and my energy. So like, and it's not even $2. It's just like maybe $1 or less, but it's like, it was worth it to me when I reframed it in my mind of like, this is like hiring an assistant to do some of these things for me at the end of the year, like it's much easier than the old way that I was doing it that wasn't working very well. So when you think about it, it's like I'm paying someone, but it's really a system to do this for me. It's so worth it.
The caveat there, I would say, is like someone in my situation where I'm a video business. I have clients that I do a lot for them, and so the bill is quite large, and so a fee on that can really add up over time. But there are ways to get around that, and there's a newer app called Melio, Melio. Melio. I can share a link that if you have a situation where maybe you have one-on-one clients that you do like private sessions, and maybe they pay for a big chunk at a time, or you're doing a retreat and someone like it's a big transaction and you want to save that fee, there are some tools, and Melio is one of those where you can send them like an invoice or send them a pay request, and they can do like an ACH transfer from their bank account, and there's no fee at all. So there are options like that available. You don't want to do that for like every drop in and like every little thing. It's not worth the hassle. But for the bigger ones, that is a way to save a little bit on fees. So within operations, I want to draw a picture. If you're watching this on YouTube, it might help just kind of see things visually. Like it might be a little bit easier to understand. If you're listening on audio only, I will try to explain what I'm doing, and maybe, hey, go over to YouTube and check this out if you want to see what I'm drawing. Okay, so I'm just going to draw a little picture here, and let's say this square in the middle, that's a rectangle, whatever, is your business. We'll call this KC Yoga, Kristen Campbell Yoga. And this is the LLC or the sole proprietorship, whatever. This is your business. And let's say you have people here. She doesn't look very happy. There we go. Happy yoga person. They do the yoga and they pay you money. It goes into Kristen Campbell Yoga, that bank account. All right. And then let's say you're down here and you need to buy stuff, so like this is a yoga mat. And if you're watching this, you can see how an amazing artist I am. Freehand. That's a yoga mat. And you need to buy one of those. So there's your money. That little rectangle's money. That comes out of Kristen Campbell Yoga. So it's important to keep those things separate. You have a personal account over here. So let's say this box is just Kristen Campbell. All right. Stuff does not come out of that to buy things, and people do not pay you. That all needs to flow in and out of Kristen Campbell Yoga bank account. Now let's say you made some money. Awesome. I want to pay myself a little bit for the work that I did. So let's say for the month you made $500, and maybe it cost you $100 for like rent and whatever else. You have $400 left the end of the month. I would not recommend spending all of that, but let's say you want to pay yourself like, I don't know. Well, let me show you how I do it. I don't want to overcomplicate it, but I follow a process called Profit First. And there's a really good book that outlines that. And it's a little bit more complicated than you need to get right now as far as all these separate bank accounts and stuff like that. But it's something to work towards. But I love his percentage idea. What he says is set up some percentages of every dollar that comes in. Some of it is going to go towards my salary or what you pay yourself. A certain percent should be set aside for taxes, and then a certain percent should go into like a profit account, or like think of it as like a savings account. And you do that up front, because what happens, even in your personal life, what happens when money comes in and you spend first, and at the end of the month you're like, oh, maybe I should save some money. You're like, nope, it's all gone. Where did it go? If that hasn't happened to you, you just haven't been alive very long. Like, you need to plan ahead of time and tell the money where to go, or it will just be gone at the end of the month. And we want to do the same thing in business. So a good rule of thumb is, how about set aside 10 to 15% towards taxes? And this is like of the raw money that comes in. So, you have what money comes in, and maybe your rent, like Okay, take that out. But what is left over? Let's take a certain percent and set it aside in that savings account for taxes. And that could just be in your personal account. So back to the drawing. Let's say 10% we're going to set aside. So taxes, 10%. So that's $40. We're going to transfer from Kristen Campbell Yoga to Kristen Campbell bank account. But I would have a savings account. Hopefully you have a savings account. Put that $40, that's the tax. Set that aside. If you do not set aside money for taxes, you will owe money at the end, unless you have other income from like a W-2 job, or your husband or wife makes a lot and has withholdings. Like if they have enough withholdings to cover you, it might be okay, but you likely will owe money. And if you don't set aside enough and pay throughout the year, the IRS will also penalize you and charge you a fee and interest on that for not paying enough in throughout the year. So you want to set aside money for taxes, okay? And then let's say we want to set aside 10% for profit, or like for saving for a rainy day, saving for when you might have a low month, saving for when you want to like purchase some equipment. Like you want to set aside some money and essentially kind of become like your own line of credit. Instead of having to put it on a credit card, you can just pull from your savings account and buy that new speaker, or pay for something when it breaks and goes out, So let's say that 10% is profit. That's another $40. And that you can put that to the same account, or you can set up a separate account. Sometimes what I'll do is I'll have one savings account, and I'll have a Google spreadsheet or something where I just say like, here's the total, and then just keep it a running total of like this much is for this and this much is for that. You can go as far as setting up separate accounts. So I do this. Discover actually has some really high paying savings accounts. At the time of this recording, it's like 5% or something like that. But even when interest rates are low, I find that Discover still is one of the higher paying ones. So check them out. Go to discover.com, and I'm not an affiliate or anything, but you can set up multiple bank accounts. And so I have one that's just my like emergency savings account. This is me personally. Then I have one for tax savings, saving money to pay taxes. And then I have one that's for like investing. It's kind of like I put money in there to save up for like buying a rental property or whatever. You don't have to get that complicated. I just find that's easier than me trying to keep track of a spreadsheet. I know all the money in the tax savings account is for taxes, and I don't spend that. I don't use that for other stuff. Don't be tempted when you've got a nest egg sitting there. That's the IRS's money, and hopefully at the end of the year, you won't owe anything, or whatever you owe, you'll have that covered. Okay, and then the remainder. So what I do is I have a certain percent. Let's say it's 50%. Is your paycheck. And I don't mean a literal like W-2 paycheck. That is only applicable to you if you're doing an S corp and you're doing your tax as an S corp. Otherwise, you don't file a W-2. You just move the money to your account. You're paid. Okay, you don't keep track of withholdings or anything. So 50%. So let's say of that 400, that's $200. Sorry, my drawing, I didn't plan this out ahead of time. So like that goes to Kristen Campbell bank account. And then what's left over is left for operations. So we've got 40, 80, that's 280. So what is that, 120? That is what's remaining in Kristen Campbell Yoga. And so that's money you can use for buying props, for paying for whatever. And you want to keep money in there. You don't want to just take everything you make and give it to you and then blow it. And if you're an LLC, there's actually, I can't remember the rule or like the thing that spells this out, but you can actually get in trouble for, I think they call it like undercapitalization, some fancy term for like taking all the money out of your businesses and there's not enough left to operate. You can actually get in trouble for that. Don't quote me on that. Talk to an expert who knows the ins and outs of that. But you just, and it's just not smart. You don't want to take all the money out and not leave anything in there to operate. So whatever that is, play with those percentages, play with kind of like your average net after like, what it costs you to produce the income. I don't mean net after all your expenses, but if it costs you $20 to make the 100 because of rent for that class or because you paid a teacher to teach it, your net is 80. It's the percent on that 80%. So just play with those percentages, and you can always adjust them as you go. You're like, you know what? I'm not paying myself enough. I'm going to tweak that percentage. Just make sure it always adds up to 100%. Okay, so that's the basic flow every month. You can do it once a month. You can do it twice a month. And Profit First, he says, do it twice a month. And I think that's a pretty good rhythm. But I typically get paid for my video business once a month at the beginning. So I tend to just do it all once a month. But all you're doing is creating transfers between these two accounts. So it doesn't have to be super complicated. Depending on your bank and what's possible, it might be, and you can have them at the same bank, just separate accounts so that you can move the money back and forth. So some banks, if you do that, they have ways within their app to like just move between the accounts. If they're different banks, and they can be different banks, it doesn't really matter. Some of them have ways to like link external accounts and move the money. So I do that for different businesses that I'm involved with. And I just transfer it out to my personal account. And then once it's there, you can use it for whatever you want. Okay. So that's the basic flow of cash coming in and managing cash. Make sure you're following some kind of process and not just winging it and not just spending all your money.
Do you have any like systems? So, like I'm like severely allergic to like spreadsheets and things like that. How do you track this? Like, and this may be something that we discuss later for a different episode, but like, what kind of systems do you use for like your accounting? Like, you know what I mean? Cause I use like Acuity that's going to bring everything in, and I can go and look at like data and stuff like that. But like, how do or do you integrate it all? Like, how do you all the things you just drew, where is that put in like an actual system?
That's a good question. Then there's a lot of different options. There's a free one called Wave that I've used, and let me look up the actual link, and I'll link to it in the show notes. But I want to say it's like Wave Apps or something. Yeah, it's waveapps.com. And they've recently changed it. They had a lot you could do for free, and they still have a free version, but they've limited some of the features. So in any system that you use, most of them will have a way to automatically import transactions from your bank account. And there might even be, depending on your bank, there are some banks that have invested in like their own built-in way to track. Because ultimately what you need in the business bank account or in a bookkeeping system, you need to make sure that you're tracking expenses in categorizing them in a way that makes tax time easier. And so what I suggest, just to nerd out just for a second, whether you're an LLC or a sole proprietor, it's ignored for taxes, and the money that you make for that business activity will go on what's called a Schedule C. So in each individual business or thing that you're doing that generates money will have its own Schedule C. So if you have a yoga business, that'll be on its own Schedule C. If you also cut hair, that'll be on a Schedule C. So you want to track those things separately, or if it's all within the same umbrella, the same business, track them together. But what I suggest is go Google what are the Schedule C categories, and you'll find a list somewhere. I think QuickBooks or one of those has like a really easy to use list, and you can use that to categorize your stuff. And so in a lot of these tools like Wave, Xero is another one spelled with an X, Xero. But that one, I don't think they even have a free account. But they're pretty good. QuickBooks is like a staple, but they're a little bit more expensive, and they can get a little bit more complicated. And there's a ton of other ones out there. Let's just Google like small business accounting system or bookkeeping, and you'll find different options. What I suggest is having some kind of bookkeeping system, even if it's just Wave and it's free. And what you have to do is you have to manually import. So here's the annoying thing. You either have to manually enter it, or you can get an export usually from your bank and then import that, and you have to use a spreadsheet. So if you don't want to do that, if you don't want to mess with spreadsheets, you don't want to mess with manually importing, you can pick one of these tools that has an auto sync or auto import, and then it'll do it for you. So if that's something, if you have an aversion to spreadsheets, then pay for a tool that automatically imports it. But then what you want to do is set up your chart of accounts, is like the fancy term for it. But it's basically just setting up your categories. So when you've got an expense, you can name it, oh, this is a supply. And you don't have to get so specific, like yoga mats doesn't need to be its own category. The Schedule C has very specific categories. And then there's also an other. So there are some things that'll be put in other, and you just list what the other is. But you can track, your cell phone. So your business, we're getting a little bit into taxes here. I don't want to get into the weeds on taxes, but your business can pay for your cell phone, even if it's part-time. Like you need a cell phone to do what you do, your business can pay for that. Your internet, if you do any kind of work at home, your business can pay for your internet. And all these different things. You want to have categories that match the Schedule C or close to it, because at tax time, all you got to do is export from that system. So if you use a bookkeeping system like Wave or Xero or QuickBooks, it's really easy to do a report or export that information and give that to your tax preparer. And now they've got all the stuff that matches all the accounts that they need, or all the categories that they have to put it in on your Schedule C. Being a tax guy and being at my degree was accounting, like this is my language. And I love all this stuff, and I love details, and like, ooh, I want to track like how much money that came in for this category of revenue. And I want to track my expenses. Like I would make subcategories for things. Do you know how many times I've gone back to look at my transactions or my reports to see like how much money did I spend specifically on software versus just like computer stuff in general? Like never. Don't worry about it. Like don't, unless you really want to nerd out. The one thing I would suggest, maybe you want to know how much money did I make on retreats versus regular classes. So like if you could find that information helpful to help guide your planning, then maybe you make multiple income categories to say this revenue hyphen retreats, revenue hyphen regular class, or whatever buckets you might want just to help you make decisions. That might be helpful info. But in the end, you probably don't care, and you just want to know how much money did I make so I can put that in my income column and move on. So don't overcomplicate it, even if you love this kind of stuff. So some of you might be weirdos like me and love it. Start out. You can always complicate it later. Try to make it as simple as possible.
Yeah, because when it's simple, we keep doing it. Even if you like more complex things with, like even just in the physical sense, like I really love the benefits of and how I feel after I do like a really complex workout. Like it's working my brain and my body or whatever. But it's like on the days that I don't want to show up for those, it's like I don't want to show up for it because it's not simple enough, right? Like as just going for a walk or whatever. So keeping it simple, I think, will keep us consistent. And then, like you said, you can add some of those more like data filters and things like that, where you can see if you want to know those things. I'm along the thought theory. For me, I am the person you're talking about. It's like, I just want to know how much I made so I can tell the IRS, and here are my other expenses. That's just what works for me where I'm at. Like if I were to continue growing and expanding, I'm obviously going to need to get more complex and solve some more problems. So, but I think, I think it can be as simple or as complex as you need or want it to be, just like anything else. But like, don't let it stop you from taking your next step as a yoga teacher. Like these are the things that like we don't know, for one. So I appreciate, I get to glean from your knowledge and your wisdom a lot already, but like for you to take time to break down things like this, and even like in our past episodes, like emails and funnels and things like that like are scary, like little trigger words for people like us. It helps so much. So for those of you listening, like be proud of yourself. I hope that your brain feels a little bit sore like mine does. Like I feel like every time we have these conversations, even in the pre-planning process, like I'm learning so much, even if I'm not implementing it right away. Like I'm taking notes, I'm writing down like Wave, QuickBooks, which I have QuickBooks, but I have not used it yet. So, because it is very complex. So, anyways, just know that like, even if you're not implementing it right now, you're learning it, and hopefully you're learning it faster than maybe you would have otherwise, or just going out. Cause even like for me, to go as in my line of work, very much in the trade business, but it's like, do I just go Google like financial podcasts? Like, I don't even know who or what to listen to. So that's why we're trying to, bring this information to the yoga teacher space, because it can just feel overwhelming on top of trying to know how to be a great yoga teacher and get people to come and social media and all of that. Like, so I know I appreciate it. I hope that those of you listening appreciate it, even though again, it's one of those subjects that like we don't know what we don't know, and we don't even know how to get started on it. And sometimes it can feel like drinking water from a fire hydrant, but if you'll just take notes and you'll just kind of take one little step, I promise, like, it's not as overwhelming as it feels.
Yeah. And really I suggest talking to a pro. Like it's worth, even if you have to pay, a couple $100 for a consultation, it's worth it because all of this stuff that sounds super complicated is not for them. They can just talk to you and ask questions, lay it all out. You don't have to be an expert in all this stuff. You don't have to hardly understand most of this stuff as long as you work with someone to get things set up properly and they just explain the procedure. Like that's all you really need to know, and you will grow in your sophistication. I did not start here, even though my degree was accounting, and a lot of this stuff I know conceptually. My sophistication in this has grown over time, and yours will too. You just got to put in the work and just truck along, and over time, you will grow in your sophistication and your understanding, and like before you know it, you'll be talking this stuff in your sleep. Well, hopefully not in your sleep, but you know what I mean.
It's true.
So I
That's
just had a
helpful.
few like final thoughts before we wrap it up. Um, I didn't mention how to pay people. So if you have teachers helping you, or you like partner with another yoga teacher to do a series or whatever, if you need to pay someone for helping you with something, just like you pay yourself, you pay them out of the Kristen Campbell Yoga, out of the business account. You can transfer to their bank account. You can write them a check. So I know we don't really do checks a lot these days, but you can get a checkbook just for paying people and just for paying yourself, even if like the transfer is too hard or they charge a fee for transfers and you don't want to do that. Get a book of checks and just write them a check, write yourself a check. Maybe that's all you use checks for. Or if they have their own payment processor like Venmo or PayPal, like they can use those. They can send you an invoice or whatever. Like you can pay them that way. Just make sure you pay them with like your debit card that comes from your business account, not your personal account. One last thing, make sure you track how much money you pay each person, because if you pay them, I think the limit is $600. If you pay them over $600, you have to file what's called a 1099 to the IRS. I think January 31st maybe is the deadline for, like, in 2025, January 21st is the deadline for the 2024 numbers. It's really easy to do. Wave even has a built-in thing where I think it's like $10 a person or something. You can file that. So that's what I use. Or you can get the forms, even like Office Max, I think, or Staples. Are those still around? I think they may have forms you can hand write. This is their name. This is their social security number, and in which you have to get that, by the way. You can have them fill out a W-9 and just sign it and give that to you. That has all the info for taxes. You just fill that out. This is how much I paid them, and file that with the IRS. There's a procedure for that, and then give the other copy to the person. And if you don't do that, you can get penalized for that as well. So just make sure if you've paid them $600 or more, you're filing a 1099. If it's under that, you don't have to file a 1099. They still need to make sure that they claim that, or else they are committing tax fraud. So just put that out there. It's up to each of us to properly identify our income and declare it. So I know we didn't really dive into taxes. That is going to be its own episode, and that's coming soon. I'm bringing on my tax advisor, and we're going to discuss taxes from a yoga teacher point of view. Now, a lot of it's the same, business to business, but we will discuss this with yoga and fitness professionals in mind. So definitely stick around to catch that episode. We're going to cover some basics, and we're even going to mention some advanced strategies that you definitely want to take advantage of if it makes sense for you. And you'll also have the chance to get a special price for working with Sherry if you want her help in figuring all this stuff out for you and your situation. So thank you so much for joining us for this. Again, I know it was probably a little overwhelming, but hopefully worth it. Hopefully I've got your wheels turning, and at least you know some questions to ask a professional to figure out what's right for you in your situation. I will link to the people that I suggest working with in the show notes, so check that out. So I hope you found this helpful. If you did, please hit that like button. Make sure you subscribe so you don't miss any future episodes, and we will catch you on the next one.